My name is Christian Rummer, and I am your obstacle between you and lunch. So that's not a good starting point, but let's see that we get you still excited. We will talk about digitization with a strategy as part of the panel that we will have later, where we talk about embedded finance. And for us, embedded finance is a little bit more than just offering buy now and pay later services for retail customers. For us, it's a little bit broader. Just briefly about Culana. We were created about 6 years ago, have currently actually 10 staff members, plus a team of up to 20 developers in India. We have a platform that digitizes the entire lending and credit risk management activities around financial institutions. We use our own proprietary local code platform, which allows you as a bank to continuously improve and go on as you move forward and develop your organization, meaning that whatever solution we develop or configure for you right now is just the starting point, but we are able to continue developing with you on an ongoing basis. Our strength is that we collaborate with financial institutions, so our relationships go over multiple years and include also really the development, the digitization strategy that we see here. We believe in the focus on knowledge-based lending, while also, and I will explain this in a moment, looking at the human aspect of digital finance. So when we talk about digitization, you hear often the word about digitization strategy and related activities. For us, digitization is not a strategy, it's a business strategy that you have. And that business strategy needs to be combined with some digitization ideas. And here, most importantly for us, is that you understand the value of your actual client relationship that you have, the value of your qualitative as well as quantitative information that you collect about customers. And if you are a financial institution in a specific marketplace, there should be nobody else with better qualitative or quantitative information about your customers. And you should be the best place to assess the risk of this client as well as to assess the needs of this client. The strong customer focus needs to come through several channels. And these could be known today or could come up in the future. It doesn't matter. You just need to be able to have a system in place that allows you to onboard those channels as you need. And you will also be able to use your stuff. We are not against, our idea is not to eliminate stuff. Our idea is really to enhance the work and enhance the opportunities that you offer your staff to work on a digital platform. So next, of course, we think about what actually is a business strategy. And for us, a business strategy around banks, around small and medium-sized enterprises has two components. For us, really, customer centricity is the one that is essential. So this is what embedded finance, I think, is all about. You're no longer selling loans. You're no longer selling products. You're offering solutions to clients. Whether this being retail clients, where you develop specific customer experience, specific customer paths, where you offer financing from a high school graduate all the way to a student loan, to financing the first house, to finance first car, all the way to developing customer paths for SMEs and corporates as well. Where they onboard, then you have a package available for the employees. You offer financing for the factoring, the invoice discounting, as well as for acquisition finance or CapEx. You need to define that as a long-term customer plan, as opposed to strategizing your staff to sell a number of loans per year. Next to customer strategy, customer centricity, we of course see the credit risk mitigation, the risk mitigation, as an essential component, essential strength of institutions. Meaning, if you are good at assessing credit risk, then you're also good at pricing credit risk. If you're good at pricing credit risk, there's no need for, at the end, that you have to take that risk. If you have the best place where you can assess and manage the risk, you have an easy way also to share the risk through maybe a risk participation through a syndication, but you don't have to be the place where the risk is actually taken. If you build your strategy around those two components, customer centricity and risk management, we see a couple of concepts that you need to introduce to make this possible. The first is, of course, you need to have a good data and process structure, because you need to have access to static data as well as transaction data. And you need to have your processes so far standardized that you can allocate whether every loan transaction, whether this be a retail loan or a customer loan, a corporate loan, SME loan, in the same path, in the same pipeline, that you make them comparable. Next one, of course, is the definition of a risk appetite. You cannot go through a credit decision for every transaction anymore. It's not possible. You can optimize processes, but you can optimize processes only so far. At some stage, you need to have a risk appetite defined by a customer, and as long as this risk appetite still allows you space, you approve the transaction. There's no more a need for having specific transaction approvals every time. Next thing, which of course is important, is relationship pricing. You need to be able to understand how much do you earn on the overall relationship. And I'm not just talking about the company. I'm talking about how much do you make as a bank based on the relationship to the company, based on the relationship to the employees of the company, and maybe the business partners, so that you have a very clear understanding how valuable a relationship is for you, and by that then also be able to price aggressively if the customer wants a specific pricing for you. The physical footprint in the agile operations are, of course, concepts that are clear. Of course, we need a physical footprint to a certain degree, but certainly not the same way as we had it in the past. But institutions that I've seen that gave up completely on branches maybe have lost out in offering a complete solution to corporates. Of course, when you have the concepts defined, you need your tools, you need your platform for workflow analytics, you need your product development process, your implementation partners, and your risk-sharing partners. And that's actually where we at Kyllana come in. We offer you a platform as to manage and to digitize your entire lending process. We allow you to introduce knowledge-based lending, basically using every client interaction to collect knowledge about your customers, and also think about the human aspect of digitalization by the fact that we are not deploying a standard platform, but we are configuring our platform with you. The way we do that is through structured data collection. Basically, we have our various databases where every information gets stored, whether this being contacts, individuals, companies, meaning the entities, the loan facility, the projects, which are the loan process, and the collateral. We combine them and allow you to create the various forms, the various assessments, the questionnaires, the rating, the scoring, all those parts based on the data that is being collected. We have, next to that core process that we configure for every institution, a huge range of ancillary systems. So we have workflows, of course, in place. Last client that we are just deploying, actually by the end of this month, had an approval process of 430 steps. You would think that you might want to optimize them. We first of all digitized the 430 steps for them, and now we're going in and helping them improving their process. But they did not want to change the processes initially because they didn't want to make their staff uncomfortable, but we followed that. You can still ask whether it makes sense, but we did it, and it was actually quite a success in the end, because this client now has embraced that platform and is continuously developing, because they said we were the first ones who understood what they were doing. We added to that, of course, collateral management, pre-disbursement checks, financial analysis, hedging and funding of a transaction, the monitoring. We have a platform for reporting, for valuation, and for document management. But all these things are really part of a plan that we develop together with the clients as we are deploying. We're using digitization as a journey. We start, first of all, digitizing existing operations, as I said, then derive insight from that and develop further and advanced versions. Give you an example. One of our first clients is a bank in Rwanda. Actually, if you're not familiar with Rwanda, probably one of the most developed countries in Africa, and this client had about 60 branches, around 2,000 employees, and a balance sheet of $1.3 billion. We started with them in 2018 to digitize the entire acquisition and approval process. According to the risk manager, the head of risk management, we saved them about 72 hours of work time per loan by being digital. We then continued with them with digital disbursement and monitoring, where we integrated with core banking, because Kyllana is not a core banking system, but we connect with them. We then developed during the lockdown a Q Connect application where customers who didn't remember their passwords, didn't know that they ever signed up for digital banking, actually had access to send any kind of request. We updated to the new core banking software recently, and we started looking at recovery as a process as well, and are now upgrading the rating and scoring methodology for these institutions. Next year, we have the plan to develop new tools in which we offer accounting services, invoice discounting for customers, so that we can use the data then subsequently for the institution to make better credit decisions. Aside from that, in our team, we have the expertise to also accompany other services, other products. For example, we implemented valuation technologies for IFRS 9. We developed an ICAP report and generated data directly out of the system to assess, for example, how many loans have been declined, how many loans did not come to fruition. We developed a lending process for an impact fund. We have the scoring and rating methodology. Of course, you have to come up with the buzzwords of machine learning and AI. Let's just say we use rating and scoring, and we are relatively standard on that, but we are not trying to spoil with buzzwords here. We have stress testing of COVID loan portfolios done. We have developed an early warning system, and we, of course, provide continuously advisory on rating and data analysis. A couple of screenshots just for the application here to round this up. But basically, what is Kylana offering? We offer a service for financial institutions. We have a platform that can deploy within 2 months, if you want to, at the first basic steps, but then develop of an ongoing process over a couple of years the right application for you with all the bells and whistles, and making sure that the platform is hopefully the last platform that you acquire in this space, and make sure that you can really develop with us together. The second part that we offer is the same thing for investment funds, specifically funds who generate their own assets, meaning private debt, private equity funds who have an application process, who have an approval process, and then invest for holding. We have a platform for an SME lending fund. That's something that comes out next year, where we would install a fund that co-lends with banks based on a risk assessment that's done jointly. And we offer, of course, our low-code platform as a service so that you can develop your own applications. Our strengths are based on our platform, as I said, the low-code platform. We have a team of experts, together over 50 years of experience, have worked with over 100 financial institutions and got pretty decent feedback. If I may say, it's always difficult to prove that, but from what they tell me, I think they're pretty happy. Our clients are still quite a lot of them in South Africa, in East Africa, in Luxembourg, as well as in Geneva. So this is our client base. The time says that I have about 1 minute and 25 seconds left. But as I said, I'm the obstacle between you and the lunch, so I stop here and we can start with the panel. Thank you very much.